Good afternoon. So, this morning, or at noon, we had Powell speak. And as you can see, the market had some whipsawing from Powell speaking. He spoke at 12 at he gave an economic update or outlook, something in New York. You can see right here, a lot of manual intervention when Powell came. What we actually did was we came up and tapped this 1 hour, or was it 1 hour? I think, yeah, 1 hour breaker that I highlighted yesterday and we were doing some analysis off of. And then, I spent the morning targeting this this sell side right here. You can see the trade right here. I ended up moving my stop to break even pretty quickly because I knew it was high resistance conditions in the morning. It was a sloppy morning. And I said, I either want this to be a low resistance run or nothing. So ended up coming back on us, stopping us out at break even. But throughout this whole barcoding, I was like, I think this sell side is going to be hit. This sell side is going to be hit. And then at kind of like retraced up, melted up. At 12, we had up, tapped into that breaker, and then dropped and plummeted for that sell side I was talking about in the morning. Stopped right at the bottom of this new week opening gap to the tick perfectly. And then we kind of rallied up, and now we're somewhere in the middle of that. And we'll see what the market has in store for us. It's a little difficult because, we swept buy side and sell side of everything this morning and everything in the London session. So the draw on liquidity right now is a little hard to gauge just because we swept everything today. We even swept some of yesterday's liquidity, yesterday's PM session liquidity. We swept to the upside. But something Powell did say, so I got this from Cheddar Flow on Twitter. I kind of like using them as like a little pseudo news update for exact reasons like this. They said, Federal Reserve Chair Jerome Powell suggested that he is pleased with inflation's decline this summer and that the central bank is unlikely to raise interest rates again unless it sees a clear evidence that stronger economic activity jeopardizes such progress, per the Wall Street Journal. So we're probably not going to raise interest rates until he said we're going to hold off on raising interest rates, which sounds pretty bullish for the market. Not that we really, that's kind of like fundamental trading. We don't really trade fundamentals, but it's good back knowledge. I like it. I think it's interesting. So the dollar, but let's look at the dollar because the dollar can fluctuate based off of rates, and we like to pay attention to the dollar. So this morning I was talking about how the dollar was bouncing off this daily fair value gap. We were looking at the 4 hour this morning, and before this candle printed, when it was this candle, it was coming down to consequent encroachment, and it was just closed right on that. So I was hoping to see it stop at consequent encroachment and then turn around. It didn't. We came down to the low of this daily fair value gap. We took out this swing low, and we're kind of retracing. So similar to the story in the indices, it's kind of hard to see what the dollar wants to do. It does look, it's hard. It's hard to see what the dollar wants. We got to pay attention really to this daily. If we close below this fair value gap, then we'll probably see some further downside. But if we keep respecting it, then this swing high, and that will eventually be taken. I think that will happen. I don't think it'll happen today or tomorrow. I think it'll take like a big news driver with this, everything happening overseas. We'll probably send it up there. But for the rest of the day, the dollar is swept liquidity on both sides. It's looking like it might just like melt down. So it's good to know where the dollar is at. Looking at NASDAQ. NASDAQ, we're still below this weekly imbalance. NASDAQ did a similar thing to ES. NASDAQ took out that London low like that. Oh, fuck. As for ES, so we still have this breaker structure on the 1 hour and we tapped it, and it doesn't seem like we want to give any pressure to it right now. I like this breaker because as long as we're below it, I'm expecting like downside. We have this up close candle. So we had buy side taken this morning. And then we had it taken again, tapped the breaker, but still couldn't close anywhere even remotely in this up close candle, which is acting like a bearish order block. This morning we had this 15-minute breaker that worked pretty well to deliver 5 handles here. If you got it, it would have got 5 handles and a little more. We should have. That was, again, a little bit of some over defensive trading on my end, but I don't regret it because I spoke about in that live stream why I don't regret it. Being defensive is good. We just need to make sure that we don't lose enough money so the wins that will come add up. I'm going to take these buy sides and sell sides off the chart. So again, this might be a little difficult because there's no obvious draw on liquidity. If we get, so these are the extremes of the day. This is the high, this is the low. If we get above or below one of those, I would kind of look for continuation. I would expect continuation. Another thing to notice is even on the 5 minute, this is our swing low and our swing high in the 5 minutes. So until we print more structure, it's not like we're going to be able to identify any kind of sweep of liquidity. I think it's interesting to see how, so at 12, we had this run up, and this was the high, tapping into that higher time frame breaker. We had to come down, sweep the sell side. And when it came back up, our bodies respected consequent encroachment of this wick. I picked that wick because it's longer than the wick next to it, and it's the wick that makes the high. So we respected consequent encroachment there. Then just like right this high on the 1 minute, broke on the 1 minute, came back, returned into a fair value gap, came lower. Came lower, kind of curved up to this fair value gap. But again, there's no obvious draw on liquidity right now. And something that would make me weary to go short is this opening range gap. So if you notice today, we haven't really moved too far from the opening range gap. And we've had a lot of whipsawing. We've taken out liquidity on both sides of the market. I wouldn't be surprised if this opening range gap is just something that price kind of gravitates and keeps trying to get back to for the rest of the day. Do. After seeing how the market behaved during Powell speaking and seeing how it's behaving now, might be worth your while to just take the rest of the day off. Just waiting for something. It's a little obvious. I'm probably going to log off just because, you know, the draw on liquidity, there's no obvious liquidity sitting anywhere after the Powell whipsaw. It's a Thursday. Probably better to like save our mental capital for a time or a trading session where there's more probability. Because as you can see right here, the market's not doing much. I mean, we can get some movement later in the day, but I feel like with how price behaved, taking out all the buy side and all the sell side, there's no high probability. And the market will move, but the market's here every day. So I would also advise you to take the rest of the day off and enjoy it. Relax.